Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HKT Trust and HKT Limited annual report. HKT Trust and HKT Limited offers a diverse range of businesses and services across various segments. In the telecommunications services segment, the company provides voice and unified communication solutions, including local business telephone services, international telephone services, and communication security services. The mobile segment offers data connectivity services such as leased lines, optical data services, dedicated cloud connectivity, and payment solutions for banks. The other businesses segment includes enterprise communications solutions, audio-visual solutions, office solutions, data infrastructure, professional services and maintenance, and video surveillance solutions. In addition to these core services, HKT Trust and HKT Limited also provides broadband services, Wi-Fi, cloud office and hosting, and anti-DDoS services. Its mobility solutions include fixed mobile integration, collaboration, mobile business, and other mobility solutions. The company also offers facility management services, merchant payment solutions, virtualization and cloud services, and call center outsourcing services. Furthermore, HKT Trust and HKT Limited provides a range of consumer-focused services, including fixed line and IDD, internet, infotainment, and smart health services. Its home automation, home network, home entertainment, consumer electronics, and smart living online shop services cater to the needs of individual consumers. The stock price of HKTSS has experienced a significant increase over the past year, rising by 21.99% as of February 9, 2026. Several key news events have likely contributed to this growth. One major factor is the company's solid financial performance. In its latest annual results, released on February 22, 2025, HKT Trust and HKT reported revenues of HK$35 billion and statutory earnings per share of HK$0.67, meeting analyst expectations. The company also announced a final distribution per share stapled unit of HK$47.97, leading to a total distribution of HK$51.77 for the year. In addition, HKTSS has made significant progress in its business operations. In July 2025, the company reported robust interim results for the first half of 2025, with a 4% total revenue growth to HK$17,322 million. The group also integrated artificial intelligence, AI, into its operations, contributing to a 7% reduction in overall costs and over 3% growth in total EBITDA. Furthermore, HKTSS has been expanding its partnerships and collaborations. In February 2026, the company announced a collaboration with Yushu Technology, a Chinese mainland robotics company, to promote the adoption of physical AI and related innovative technologies among local and global enterprises. While some negative news emerged in October 2025 regarding the U.S. Federal Communications Commission's intention to revoke the operating license of HKT International, Morgan Stanley analyzed the potential impact on HKTSS fundamentals and deemed it manageable. Overall, these positive developments have likely contributed to the increase in HKTSS stock price over the past year. HKT Trust and HKT Limited maintains a market capitalization of $90 billion, broadly in line with the industry peer group. HKT Trust and HKT Limited trades at a higher price-to-earnings ratio of 17 times and a higher price-to-book ratio of 2.48 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 66% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has remained broadly unchanged, indicating no significant dilution or buyback activity over the past 5 years. the company have a dividend yield of 6.73%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for a company can be attributed to several key factors. Firstly, the expansion of FTTH connections and mobile services revenue contributed significantly to the growth, with a 4% increase in FTTH connections and a 5% rise in mobile services revenue due to higher roaming revenue and a 20% increase in 5G customer base. The enterprise business also played a crucial role, achieving an 8% revenue growth. Additionally, the increasing demand for AI services and applications among consumers and enterprises drove growth. The robust uptake of high-speed home broadband services and average revenue per user, ARPU, uplift of around $70 further contributed to the revenue growth. The mobile postpaid customer base growth, sustained year-on-year growth in roaming revenue, and expansion of Now TV customers with the addition of Disney Plus and sports content also drove revenue growth. Furthermore, the growth of OTT segment by 16% year-on-year and strong growth of 1010 Home Premium Solution customer base, 32%, were notable contributors. On the other hand, the primary drivers of revenue decline can be attributed to a few key factors. The migration from basic voice services and weakness in small and medium-sized enterprise segment, local retail and food and beverage sectors contributed to the decline. Additionally, the pay TV services experienced a 1.7% year-over-year decline in revenue, resulting in a decrease of $56 million. Overall, the company's revenue growth can be attributed to its ability to adapt to changing market trends and customer demands, while its revenue decline is largely driven by the shift away from traditional voice services and weakness in certain segments. The company's debt level has undergone significant changes in recent years. According to the extracted summaries, gross debt has increased by approximately $3,027 million, rising from $41,723 million to $44,750 million. This increase is a notable change in the company's financial landscape. However, despite this rise in overall debt, interest expenses have actually decreased. The data shows a 23% and 14% drop in interest expenses on page 13 and page 14, respectively. This suggests that while the company may be taking on more debt, it is managing its interest payments effectively. Breaking down the types of borrowings, we see that both short-term and long-term borrowings have increased. Short-term borrowings rose from $39.34 to $58.84, while long-term borrowings grew from $37,372 to $38,691. These increases indicate a shift in the company's borrowing strategy, with more funds being allocated towards longer-term commitments. Overall, the data suggests that the company's debt level has increased significantly, but its interest expenses have decreased. This may be a sign of improved financial management and a more efficient use of borrowed funds. The company's performance was marked by several segments and regions that excelled in the given period. The mobile segment stood out with a notable increase in postpaid exit ARPU by 1%, a significant rise in mobile product sales of 30%, and a 5% growth in mobile services EBITDA. Additionally, the Club Loyalty platform saw its membership base expand by 3% to 4.15 million, while DrGo's registered users rose by 3% to 410,000. In terms of revenue, the telecommunications services segment recorded $23,243 million in 2024 and a projected increase to $23,891 million in 2025. The mobile segment also saw substantial growth, with revenues reaching $10,684 million in 2024 and expected to rise to $11,830 million in 2025. Geographically, the company's performance was strong across various regions. In mainland and other parts of China, EBITDA increased from $1,849 million to $1,040 million, while in others, EBITDA rose from $4,750 million to $4,965 million. Hong Kong also performed well, with revenue from external customers reaching $28,154 million in 2024 and projected to increase to $29,548 million in 2025. Management is optimistic about the company's future performance, citing a stabilizing economic environment and supportive government policies as key factors that will contribute to success. They are confident that the company will achieve even better results in 2026. The company's strategy for growth involves driving digital transformation through the incorporation of various AI applications at the enterprise level. This initiative is expected to have a significant impact on the business, enabling it to stay ahead of the competition and capitalize on emerging trends. In addition to its focus on digital transformation, HKT is also investing in upgrading its customers to its 2,500 million-plus services. This process is expected to continue over the coming years, with the goal of providing customers with a more comprehensive and integrated experience. Overall, management's outlook for the company is positive, with a strong emphasis on driving growth through digital transformation and investment in new technologies. The company's financial performance indicates a commitment to shareholder value creation through various means. One notable aspect of this commitment is the payment of dividends. As per the provided information, the company has indeed paid dividends in 2025, with a significant amount of $6,037 million being declared and distributed to shareholders. This action demonstrates the company's focus on rewarding its investors for their loyalty and trust. By paying out a substantial portion of its profits as dividends, the company is able to share its success with those who have invested in it. This practice not only benefits individual shareholders, but also contributes to the overall stability and growth of the market. In addition to dividend payments, the company's financial statements may also reveal other initiatives aimed at returning value to shareholders. However, based on the provided information, it is clear that paying dividends is a key aspect of the company's strategy for creating shareholder value. Concerns about inventory buildup and supply chain disruption are warranted. The financial projections for the company's fulfillment costs in 2024 and 2025 indicate a significant increase. The figures of $365 million and $367 million respectively suggest that there may be issues with inventory management or supply chain efficiency. This could lead to potential problems such as inventory buildup and supply chain disruption, which can have far-reaching consequences for the company's operations and bottom line. That concludes the financial summary for HKT Trust and HKT Limited. Feel free to comment below, and I will be happy to answer them when possible.